Hey guys, welcome back to my YouTube channel. Today we are going to run through quite a number of things. We're going to go through the fundamental analysis for the week. I'm going to take you guys through my April trading results, and then I'm going to record just one more trading video to end the week. So let's just jump right into the fundamental analysis for the week, which is the 28th of April to the 4th of May. Just a reminder that this is not financial advice. Please do your own research and due diligence when making informed decisions on the financial markets. So COT reporting, we had quite uneventful this week actually. We had some big change on US 30, Euro, Pound, Silver, but everything else sort of remained the same. Not really too much to comment on for COT. We did have big economic data though, so PCE came in neutral. It got revised up, but was cooler than expected. Advanced GDP was neutral as well, so it was revised up from last week, but was considerably weaker than expected. Consumer confidence also neutral. Average hourly earnings down from last week, which was sort of similar to last month, being revised down. ISM manufacturing was better than expected, but we're going to dive a little bit deeper into the actual numbers for PMI manufacturing. I've got some comments on it that I wanted to run with you guys, as well as NFP. NFP was net bearish, however, not as bad as last print, but still not strong nevertheless. So we can see still weakening of the US dollar, especially with uncertainties right now. I would rather, if I was to choose a side, I'd definitely short dollar if we have a stronger pair to trade off of. Aussie, we actually gained quite a bit of momentum. So CPI, trim in CPI was all hotter than expected. We also had retail sales that was neutral, so it was revised up from last week, was lower than the forecast, but you can see how much it's actually got revised up 4 times from 0.2 to 0.8. So very big revision, sort of suggesting maybe a bit of strength in the Aussie right now. And I am in a AU trade, long AU, which I will run with you guys after this. Yen, we're seeing weakness in yen as well. We had policy being the same. We had retail sales being cooler than expected. We had unemployment rate being higher and hotter than expected. In terms of Bank of Japan, there was a press conference on the 1st of May with the policy rates, and pretty much it was a very dovish statement. Kept harping on Japan's economy not doing well, uncertainty with trade and policies, CPI inflation being likely to be sluggish due to deceleration in the economy. It was only hot because of the rice and exports and shit like that. So not really a good outlook on Bank of Japan, and even just the economic news bar the inflation. Look at all those reds. So we're starting to see yen actually tip the other way. It had a lot of bullish momentum in the last month or two, but it looks like it is headed back to that bear territory. In terms of graph, you can see core PCE for the month came in very, very cool. It sort of stopped that inflation narrative. We've also got year on year coming down, so we're really seeing that inflation cooling. For US, Aussie, we see month on month, or quarter on quarter, sorry, higher than previous quarter. We do see the general trend coming down on year, but we might have a little bit more give in the market right now from that last quarter on quarter reading. GDP, you can see, just shot down, really reflecting struggling US economy. ISM, you can see it's coming down. Manufacturing, you see a general services trend come down as well. And this is what I wanted to talk about in terms of the actual April figures. You can see the thing I want to focus on is new orders, employment, and new export orders. So new orders, you can see slower, contracting. Employment contracting, meaning for future, projecting future, we are contracting. New orders is contracting. It is faster, but it's still contracting. So you can see, just look at the direction. It's all contracting, slowing. The only thing that's growing is inventory and prices, which is sort of suggesting that stagflation concept where the manufacturing side of things is really slowing down. Consumer confidence coming down, so you can just sort of paint the narrative for US dollar coming down. Average hourly earnings, you can see, got that general slope down. Retail sales for Aussie, we had that big revision here, which pumped it back up. If not, it would have been here, which is still hovering around that mark there, but maybe a bit of strength in the Aussie, we'll see. I'm banking on it though. NFP, not too bad on the NFP, still higher than expected here. But you can see jolts coming down, and you can see unemployment coming up in the last 1, 2, 3, 4 months. So this week's data, just a brief reiteration: Bank of Japan slowing down of the economy, effects of, so this was the import priced in rice, past rice import prices pushed up inflation, expected to wane. So just a very, very dovish sentiment on Bank of Japan. Aussie, we had CPI, so harder than expected on CPI on all three readings. And then USD, we had GDP and PMI, tariffs, decreased economic activity in USD. So this is my thoughts on the outlook of the tariffs. Initially, I'm thinking there would be a decrease in USD because of limits of trade. But if they manage to do it properly, then their manufacturing should actually go up. And if their manufacturing goes up and people want to buy from the US, then we're going to see better GDP readings from USD in the long term. And then just harping on PMI, decreased new orders, export order index, and slower new employment equal contraction. Next week we have services PMI, which will be very interesting to see. We have FOMC as well, and the rates, as well as WALA. So just a big week for USD next week. Bias wise, still happy to long gold if it has a really, really strong technical setup. US 30 on the sidelines right now. AU longing, have a trade on that, so we'll see. UJ, yen still a little bit weak, so I'm not trading that. AJ, happy to long AJ, but we'll see if price does give us an entry. So if we jump on the charts, I'm going to show you guys. I'm just going to exit that. I'm going to show you guys my trade. Let's go my trade first. So I did get in an AU trade. I think it would have been 1st of May for sure. Definitely not April. But what we see is a pump up from this low here. So if we go weekly, let's just see if we've got any structure. No, so we pretty much look really, really low on a weekly. Previous support there. We had a really big surge here from that point. I'm seeing price contract and consolidate. I saw a nice entry here, an engulfing candle here. I took the buy there. Could come down and stop me out, or could pump up, but it was a good entry. We had an engulfing here. We had previous, look at how many areas has actually rejected this area. So yeah, we got not the best entry, but a nice entry nevertheless. We have rejection wick and an engulfing. I'm just going to see how it goes. And hopefully if it does go up and pump up, we have a lot of room for the upside, to track all those zones. So yeah, I'm happy to be in that AU trade. Let's just go through the charts now. We have Aussie index coming up. Again, consolidating here, but we do have a big momentum here. So it'll be very interesting to see what happens next week. DXY consolidating, may come up, test this bearish downtrend line, but not really too much to comment on. Yen, we are coming down in the last 2 weeks. Yen looks like it's coming down, might touch this line as well. So yeah, just slowing down for the yen. AJ, we did get a nice breakup. I have marked this zone here, the resistance, which could turn into support here, and we'll get a nice entry here if we have a nice candle. And gold, we are in a nice support zone right now. If we can get a really nice daily candle, I don't mind getting in, but it really has to be a nice candle. I'm not getting in no junk candle like that. That's not strong enough of a reversal for me. So yeah, that's pretty much it for my fundamental analysis for the week.